A special thank you to each of our subscribers who make this channel possible. Here's today's story. In a dramatic escalation of the ongoing trade tensions between the United States and China, Beijing announced on Friday that it would raise its tariffs on U.S. goods to a staggering 125%, up from the previous 84%. This retaliatory move comes in response to U.S. President Donald Trump's aggressive tariff policies that have seen rates on Chinese imports soar to an effective total of 145%. The Customs Tariff Commission of the State Council of China issued a statement declaring that the current tariff levels have effectively eliminated the market for U.S. goods in China, stating, even if the U.S. continues to impose higher tariffs, it will no longer make economic sense and will become a joke in the history of world economy. The statement further emphasized that China would not respond to any additional tariffs imposed by the U.S. on Chinese exports, indicating a firm stance in the escalating trade war. Hopes for a resolution to the trade dispute have dimmed as both nations continue to impose tit-for-tat tariffs, with U.S. Treasury Secretary Scott Bessent criticizing China's reluctance to negotiate. He described the Chinese economy as the most imbalanced in modern history and warned that the current escalation would ultimately backfire on China. Goldman Sachs has responded to the trade tensions by downgrading its GDP forecast for China to 4%, citing the adverse effects of the tariffs and a slowdown in global economic growth. While Chinese exports to the U.S. represent only a fraction of its total GDP, analysts suggest that millions of workers in China are dependent on U.S. trade, highlighting the potential domestic fallout from the ongoing conflict. As the trade war intensifies, stock markets in Asia have reacted negatively, with Hong Kong's Hang Seng Index poised for its worst week since the 2008 financial crisis. Investors are wary of the implications of the escalating tariffs, particularly as U.S. markets also experience significant declines, with major indices such as the S&P 500 and Nasdaq suffering losses of over 4%. Despite the turmoil in the markets, President Trump remains optimistic about the trade war, asserting that it will ultimately benefit the U.S. economy. He has faced criticism for his handling of the situation, with some calling for an inquiry into potential market manipulation following a series of tweets that appeared to influence stock prices. Trump's insistence on the necessity of tariffs stems from his belief that they are needed to address China's significant trade surplus with the U.S., which he claims has been detrimental to American interests. In the midst of the escalating tensions, the UK is also likely to feel the impact of the trade war, with cheaper Chinese goods expected to affect price growth and demand for British exports. As the situation develops, both countries appear entrenched in their positions, with China stating that it is prepared to fight to the end in this trade war. The international community watches closely as the ramifications of this conflict unfold, with potential global economic consequences hanging in the balance. That's all for this story. We upload videos every day covering many different subjects, so hit that subscribe button to stay informed. Thanks for watching.